Hey, good afternoon, everybody. Thanks for joining us today. Rob's going to start like he usually does, go through the market charts. So if you have any questions, put them in order, and I'll go through them as they come up on the screen. Go ahead, Rob. I'm just in a trade right now on RTY short.
All right.
I was up and I came back down. Go ahead, Rob.
Thank you, Frank. Good afternoon, everyone. Welcome to another one of our Wednesday webinars. Good to have you guys join us. I always appreciate the attendance. I am Stock Darts, also known as Rob, and Frank is Stock Guy 22. That's the guy that you just heard talking. For those of you that are new, you can always find us on Twitter with the same names. You can find us on YouTube with the same names. You can find myself at patreon.com/StockDarts. I have a blog there that I share a lot of content, some paid, some free. And then Frank is still trying to set up our new incarnation of StockGuide22.com. That should be coming along shortly. As usual, we're going to go ahead and take a look at the four major market ETFs. We're going to take a look at the S&P 500, the NASDAQ Composite, the Dow Jones, and the Russell 2000. Once we finish with that, we will also take a quick look at the U.S. dollar, see how it's performing, see what kind of impact it's had on commodities such as silver, gold, and oil. And once we finish that, move on to the chart requests. Those of you guys that are in here early, if you guys have any chart requests that you are interested in, feel free to type it into the chat. That way I get an idea of what we're looking at and what kind of time I need to allot towards those things. All right, so let's go ahead and take a look. That was IWM. We were looking at that for Frank and his trade on the Russell. But let's start with the S&P 500 on the ETF SPY. And we've had a pretty good week so far on the overall markets. We've had a nice run since last Wednesday. We were looking at last Wednesday, we were kind of at a point of contention in the markets where we could have rolled over or we could have made this last push to try to get to new all-time highs on the S&P 500, and that appears to be what we are trying to do. Now, you can see yesterday and today we finally got some tiny little candles. Let's get rid of these ads. And we fell just short of all-time highs, but overall, we're right up to the very top of our range and the ceiling of price action for the S&P 500 for this year so far. And now, the big question now, of course, is, are we going to have enough momentum to push us towards new highs, right? Are we going to be able to break past this? I suspect that we will, at the very least, try to peak above them. And we haven't done it yet. We haven't really found a lot of selling yet, but you can see we did stall out just short of those all-time highs. Ultimately, this was the sort of what I expected way back down here in April and May, when we finally established a nice bottom. The expectation was that we would ultimately get to this level. We've now reached that level, and I think the big key now is this going to be the ceiling? And are we going to just sort of turn around and start heading lower, or are we going to try to push out? And I think there's an argument that can be made for both, right? If you take a look at the NASDAQ, you take a look at IWM, and they actually printed new highs, which would seemingly lead us to believe that SPY is going to go ahead and follow suit and print new highs. However, just looking at the longer-term chart, I still have this expectation that we are sort of transitioning into more of a broad sideways range, very similar to what we saw in 2015, 2016, 2017. And if that's the case, then I expect us to probably find some strong selling as we start to really approach and sort of probe past these highs, or right around 286 to 290, and see what happens in that range. You can see we are still trying desperately to sort of maintain this upwards trajectory that started back in the middle to end of 2016 and sort of lifted and gave the markets a strong rally throughout all of 2017. And we lost a lot of that momentum to start this year, and we've been trying desperately to sort of regain it and recapture that sort of mode. And I would say it's to mixed results right now. And we'll see what happens as we really start to bump up our head against the ceiling, which I think it's going to be a stronger ceiling. And I don't really expect the S&P 500 to do the same as IWM and the NASDAQ and sort of push through it. But I've been wrong before, and I'll be wrong again. So we'll wait and see what happens. As usual, when you're a trader, you don't want to predict. You don't want to necessarily predict what's going to happen and stick to it. You want to sort of come up with these different scenarios that could play out and then react to them as they occur. I think that's usually the better way of doing it. And so I think there's two major scenarios that are in play right now. And the first is that we actually push through and make new highs. And then the second would be what I consider more likely, which is, yeah, maybe we print a new high, but we'll kind of come back in and we'll stay in that box that I sort of just drew a minute ago for maybe the next few months. And so now the idea is, if we do end up maintaining this as our range and we falter, well, then the healthy thing would be if we spend the next couple months in this range and we don't actually come all the way down here. I think if we come all the way down here, that's actually a pretty bad sign, right? Because then that means that we lost. Not only did we sort of top out up here, but we've come back down and we start challenging the year's lows. Means there's a good chance we try to probe below those. So ideally, what we want to see now is we sort of stall out and print a little bit lower, but we stay in the upper half of our yearly range and we continue to build up momentum, trying for a cleaner break to new highs a little bit later on, once we get a little bit more of an exchange between buyers and sellers. Now, of course, we can't just break to new highs, right? If we break to new highs, the issue I have with that is the market's starting to get a little overbought, right? We've been pretty stretched out. We had this nice little 4 or 5 day correction, but other than that, we've been mostly just going straight up. And I think if we do try to break to new highs, we're doing it kind of running on fumes. And if that's the case, more likely than not, we're not going to get a clean break. And even if we did, the risk reward is really not in a good spot here. So ideally, what I'm going to do is, if we do end up breaking out, I think what I'd like to see then is we sort of break out and then retest. And then from there, we can go ahead and start looking at plays. As long as we stay above that 286 to 287 area, we can start looking for plays that are going to mimic that and make their way upwards, right? And so I think that would be the general game plan on a breakout. I'm still taking long trades. As those of you that are regulars here know, when we are looking at the markets, a lot of times when we're analyzing these charts, we're looking at this more to gauge the health of the market and to gauge what type of environment we're in. And then from there, we can decide whether we want to go forward and trade other names, right? When I'm analyzing SPY, I'm not necessarily telling you I'm going to trade SPY, more that I'm using this as an idea of when I want to buy and sell other stocks. And so that's what we're looking at right now. I think we're still in a buyer's environment, but I do suspect that the market is going to tire out over the next few days and have a little bit of a pullback, or at the very least a flag. I would say the most likely scenario right now is that we spend the next few days in this area here. Just dealing with this. Let me change that color back. So dealing with this resistance and then this green trend line. And I think we're going to sort of pin between those two, and then from there decide whether we have enough steam to break out or whether we need to come back down a bit and start testing 280 a little bit more and our moving averages, which we're a little bit ahead of at the moment. And I would say that's the most likely scenario, and that's a scenario I see playing out more likely than not. The next more likely scenario would be a breakout. And then finally, the least likely scenario is that we really roll over, and not necessarily just that we break this trend line. I expect us to break this trend line in the next month or so. But if we start to lose 280 and drop down into this area, I would say that's the least likely scenario, but still one we have to have in play. And if that's the case, again, I think 270, which I don't expect us to come to anytime soon at all, but that's going to be a good spot, I think, to go ahead and take long plays when we do meet that area. Anything in between that, I think it's going to have to be more of we have to judge it from a week-to-week basis and see where the buyers come in once we pull back. But I expect us to pull back soon, but the initial pullback I expect is a really slight one, just in this range here. And then from there, as we start to challenge that green trend line, we'll see whether we just find support at 280 or whether we need to dip down a little bit lower and start probing into 270s. And depending on the nature of how this works, probably if we do go down to 280, it will be right around when the 50 comes up to meet it. And if that's the case, that should be a pretty good area of support on a pullback. But again, I think that's probably a scenario that comes into play maybe 2 weeks from now. I think from now to next Wednesday, we should probably stay somewhere in this range with maybe a small attempt to go above it or a small attempt to fall a little bit below it. All right, now we take a look at the NASDAQ. And you can see the Nasdaq is almost in the same spot as the S&P 500, and that's one thing that I did take as a positive when I was looking at these markets right now is we actually have three of them synced up pretty closely, and that's nice because it seems like over the last couple of months there's been a little bit of a disconnect where the Nasdaq and the Russell 2000 have been stronger. We've seen weakness out of the S&P 500, out of the Dow Jones, and at the moment we're seeing three of them that are very similar, right? The Nasdaq and the S&P 500 are very close, both of them trying to push to new highs. IWM's a little bit weaker at the moment as far as how we're looking at it versus the highs, but it's pretty close. And then I think the one aberration so far still is the Dow Jones, but I think the Dow Jones is picking up strength and trying to catch up to its peers. And I think if all four move together, then maybe we do get a breakout to new highs. And that's something I'm looking at and waiting to see how that occurs. But we do have a few of these that are getting close to each other. Now, again, looking at the NASDAQ, this is not necessarily what I want to see when we're trying to push to new highs, right? This is already a rising wedge coming up to highs, coming up to resistance. Typically, in this scenario, you fail at the highs and pull back, and then from there maybe build up a much more sort of a much more constructive pattern to build a momentum to push to new highs. Again, this is not the trade. This is not what you look at when you're trying to trade a breakout. You've got 1, 2, 3, 4, 5, 6, 7 green candles in a row coming up into resistance. The candles are getting smaller as you get to resistance, showing that momentum is starting to decrease. And the risk reward's poor. Momentum's waning. We're starting to get overbought. Like, just in general, I'm not saying that we can't break to new highs. Just that this is not the trading opportunity we are looking at when we're trying to find a trade to new highs, right? So, however, overall, it's still positive in that the market is right underneath highs. It's hard to really say anything bad about a market when you are literally just points away from new all-time highs. And I think that's another thing that I want to keep taking away from this is the market is healthy. The market is very strong, and anything you read on the news or any bad news you hear about tariffs, any bad news you hear about jobs, it has no impact on the market right now. And is until it has an impact on the market, you should just tune it out. There's a lot of times people get nervous. Just if we would have just backtracked to here, the headlines those days are making you feel like it's a bear market, right? And like the things are just going down, and we need to just liquidate all our holdings. And that's the nature of news, right? They're looking for headlines. They're looking for people to watch them. They're not trying to give you accurate ideas of what's going on. And so what you need to do is a lot of times tune it out and just pay attention to the price action. And if you really, over the last 2 or 3 years, if you just paid attention to the price action, you would have known that you just need to keep buying. Like, obviously you need to still sort of have the right risk sort of tolerance and the sort of right plan in place. You don't want to just blindly hold and never get rid of trades or stop out. But if you would have just this entire time, instead of trying to short the market, instead of trying to figure out where the top is, if you just continue to take advantage of this upward bias, you'd be doing great. You'd be having and again, I don't know, some of you guys I'm sure are doing well, and not to say every trader is doing poorly, but I know in general a lot of the questions that Frank and I get behind the scenes is traders having trouble, and a lot of times the reason they're having trouble is they seem to get too cute with what they're trying to do, and they don't just sort of simplify things and just take advantage of this upward bias that we have in the market right now. You don't get this all the time. Trading is not always going to be as easy, so to quote unquote, as what we've seen from 2008 to now. The market doesn't normally sort of run like this, and sooner or later we will enter a much more difficult market. And I think this year's been more difficult than what we had last year, because again, I think this year is sort of almost analogous to what we saw in 2015 to 2016. But overall, if you just look at the longer term trajectory of things, this is one of the best times that you've ever had in your life to trade. And if you're not taking advantage of this now, you're going to sort of pay for it more when things get more difficult. And you might look at this now and say, well, this is so super overextended. I should not be buying here. And yeah, maybe long term you shouldn't be buying a bunch of long term holdings here, but this is the same thing people were thinking here, the same thing they were thinking there, same thing they were thinking last year at the end of the year. And until this changes, really, you just need to continue to take advantage of that. All right, so price levels, right? We've got all-time highs, 183. If we push past that, again, I would probably not try to take too much. I don't think I'd be too involved on a breakout to new highs other than waiting for a retest of that breakout. If we pull back, I suspect that on the NASDAQ, the most likely scenario is that we spend the next week something like this. Now, yes, we might push a little bit to new highs, but I expect us to probably stay somewhere in this area as while we wait for the moving average. And then the very least likely scenario is that we head down below this. I don't think we head down anywhere below here, to tell you the truth. But definitely, I don't expect anything down here. And if we do start to approach this red trend line, that's probably a very good buy the dip opportunity at those levels. And again, the key here, the big picture with the NASDAQ is that this was the range we spent, and we've already built upon that, right? And so this is one of the signs that maybe the S&P 500 wants to sort of build off of their range and it's expand and start printing new highs. Is the NASDAQ already did that? We had that range that we were in, and we've already sort of broken out to a new range, very similar to what the small caps have done recently as well. So if that's the case, then probably the S&P 500 will follow suit soon and try to make new highs as well. Now, the Dow Jones is the one index that's really nowhere near their highs, right? Here's the all-time highs are 265, and we're still 10 points away at 255, which is a pretty big deal on the Dow. And while what we're seeing is positive, it still has a long way to go before it really catches enough momentum to start pushing to new highs. Now, again, the Dow Jones has a lot of residual strength from last year that I think is helping it sort of stabilize, and it's still overcoming some of that. It's the only index that really is still sort of firmly within the uptrend that started in 2017 or 2016, and it only had a very temporary dip below it. So overall, this uptrend is still intact, despite all the selling that we had earlier in the year. The longer-term uptrend on the Dow Jones is still intact, and so that's actually pretty strong. It's been trading in a nice channel with the bottom of that green trend line and up here at the top of that. You can see there's a nice channel that's formed, and it has stayed within it for the most part since March and April, and is slowly making its way back up to highs. If we do sort of falter here, there's a lot of nice support down here. The 50-period moving average, the 200, the green trend line. So any sort of real selling pressure in the Dow Jones, we should see some good buying support as we start to approach 250 to 251. I suspect that if we see the scenario that I'm looking for in the other indices, where we just sort of print sideways, that we probably stay somewhere between 253 and about 257 on the Dow. And then wait to sort of pick up a little more momentum to start trying to probe towards the top of this channel again. Now, one thing I do want to point out is last week when we were pulling back on the markets, the Dow Jones actually pulled back the least, showing that traders at least are starting to sort of come back to this mentality of not wanting to abandon the safer names when they're worried about the market. They're still not buying these names when the market's going up, which is good. You want them to buy riskier names, not safer names. But I did start to see a little bit of a change in that money was rotating slowly out of the Dow versus a little bit more quickly out of the small caps and the tech names, and that's the first signs of money rotating back into the Dow and strength coming in. But again, it's just the very, very first signs. Still probably a lot more to go before any sort of shift like that is more noticeable. But I did notice that the first few days, and that's something I wanted to point out. Now, finally, here's the small caps. Now, you can see not quite at all-time highs like what we saw in the S&P 500 and the NASDAQ, but not that far away either. Now, this is again, not really the pattern you want to see when you're looking to buy a breakout. Not that obviously an ascending channel is good. There's nothing necessarily negative with this. It's just not the pattern. It's not a high probability setup when you're looking at trying to take a trade to highs here. I'd say overall, I mean, the big thing here is we're just chopping around as we approach or deal with the ceiling of a range, right? So here's sort of the same thing that the NASDAQ is doing is what IWM has been doing for a while now, right? We had a base. We built our nice little range to start the year, and then we broke past it. Very textbook here. We had a breakout, a retest of that level, and then move on. Now this is what I'm explaining on the S&P 500. What I would look to do if we did break to new highs, and actually you can see almost identical to what we're doing right now in the S&P 500. You've got this sort of this run right up into highs, and it's not really a good spot to go ahead and enter. And back then, I didn't think it was a good spot to go ahead and enter to try to take a long on IW neither. But the same sort of thing played out. You've got the nice 2 or 3 day run, and then eventually you get a pullback and a retest of that breakout, and then from there, IWM really just went on and built a whole new range just above it, right? And so that's sort of where we are right now. Just right here is pretty much where we are in the S&P 500. Now, again, it's not to say that it's going to be the exact same. It's not going to play out the exact same way, but a lot of times these sorts of patterns repeat themselves in the market and history. You know how they say history doesn't repeat, it rhymes. Well, we're looking for something like this that's going to be very similar on the S&P 500 if we do get a breakout. And if it does, that's a real positive for the way we're going to close out the year, because it shows that we've already transitioned from a broad range to another sort of rally and another upwards biased market. And that'd be pretty impressive, because that maybe instead of that sort of broad consolidation that we saw from 2015 to 2016. Wait, where are we here? Yeah. Instead of something like this, it's much shorter lived, right? And we just continue to sort of make our way up. So we'll keep our eye on that. I think, again, the markets are strong, and we should be looking at trading upward bias. We're not looking. I'm not looking at short. I'm not looking at close out trades early. I'm still in the process of. I have tight stops on a lot of my trades, and I'm still sort of selling at resistance, because I still think that we are at resistance on all of the indices, but I'm not at a point where I'm trying to liquidate and sort of reduce my exposure to the market too much. For the most part, I've been sort of picking and choosing swing trades back and forth for a while now, and I'm going to continue to do that. But I don't think there's any real reason to panic yet. If you are overloaded on the market right now, because we are at all-time highs, and because we are sort of, you can see we're at resistance. Here's what we're at resistance on IWM. I don't know that we're really at resistance on the NASDAQ, because it's just one candle, but you can say, we're sort of at resistance on the NASDAQ, and we're certainly at resistance on the S&P 500. So I can see where, if you feel like you're overloaded, maybe this is a point where you rein in your risk. But I'm still waiting a little bit for more signs before I get too worried about a sharp pullback. But I do think that we are at the top of our ceiling, and I expect us to stall out at this level and to pull back. But once we pull back from there, I think we have another run at trying to break to new highs before we really figure out whether this is going to be the ceiling for the year, or whether we're going to sort of build past it. Okay, and so that's sort of my stance on that. Now, for those of you that are in here, we've got a few of you guys that are actually members and have sort of subscribed to my Patreon page. I did want to point out, I am hosting a webinar at 3 o'clock today explaining how I scan for trades and how I find some of the trades that I share on my Patreon page. Here's the Patreon page. It's patreon.com/stockdarts. And I share a lot of trades on here. Still, I launched it just a couple weeks ago. I only have 2 patrons. It's not like I don't really do this for the money. It's more to share stuff with you guys and to sort of find a new way to sort of share more content and provide you guys with more ideas and more. I could interact with you guys in a better way. Obviously, the more people that subscribe, the better it helps me. More than anything, the more it motivates me to come up with new trade ideas. One thing that I was discussing with Frank earlier today was how this has actually helped my trading quite a bit. It's interesting how this works, but when you become accountable for your trades, right? I'm putting up these trades and I'm sharing them, but I'm also putting my name and saying sort of giving my seal of approval on a trade. It forces you to be a little bit more picky about what you're choosing. And so for the month of July, I didn't lose a single trade. Every single trade I put on this blog post and every single trade I took worked. And part of that was just this idea of making sure that I only give you guys the best trades that I could find. So here's just a few of them. Netflix worked out really well for us in earnings. I had Shake Shack, which actually worked out well, although I did have to trail the stop pretty tightly on it. It ended up only being a 4 or 5 day run, but basically worked for us right away and then obviously turned completely around, but I was trailing my stop on that. We had ETP. That worked out great. We have Jaren, which I just took a couple days ago, which is working out great for us. We have Target, which is working out very well for us. And then a few others that are just in the process of starting to really move. And, overall, a lot of these are doing great for us. And so if you're interested in how I scan for these and how I find these trades, join us at 3 o'clock. Now, again, there is one caveat to that. In order to join us, you have to be a subscribing member. But again, the smallest tier you get is $8 a month. So for $8 a month, you get access to, 3, 4, 5 trades a week. So, I don't want to say promise 20 trades a month, but at the very least, you're getting 10 to 15 trade ideas a month that you're getting. And at the moment right now, it's actually at a pace for more than that. But there will be days when the market's worse and I don't find good trade ideas. And I'm not in the habit of just putting ideas to put them out there if they're bad. But just if you like what I give you guys on Wednesdays, if some of you guys have been around, Denise, so glad to see you in here. I'm glad to see you join. It's been a while since I've seen you around, but Denise is definitely a happy member of a lot of my previous workshops. She's paid a lot more than that in order to get access to my trade ideas before in the past, and I think she can attest to how much value she's gotten out of it. Almost everyone that's taken my workshops has usually done pretty well in them. That's one thing I'm really proud of. It's not what I do in my workshops, but what my students do and what they learn from them. And so this is another way of getting access to a lot of my ideas. And again, the prices I put on there are very, very, very cheap. I'm not in this to really. It's not really there as sort of a way to make profit. Yes, I get some money out of it, but that's just lunch money. That's just to not give it all away for free. I give a lot of stuff for free, but I think a lot of this stuff has value that it is value, and I think that it's worth something. Thank you, Denise. She says she's learned a lot, and she recommends to anyone that's in here. But so anyone that's interested in that, feel free to go ahead and subscribe. And again, it will be recorded anyway for those that sign up after. But it's a good way for you to figure out my process for how I find these trades and how I build my watch list and how I go forward through all that. Okay, so that out of the way, let's go ahead and take a look at the U.S. dollar. So here's the U.S. dollar, and it actually had a very nice bump up as an aggregate over the last week. You can see we came up to the top of this triangle. We're starting to try to break outside of this triangle. You can actually say it's sort of like this, sort of almost like a rising wedge. And I think overall the U.S. dollar is still just sort of consolidating. Even though there's a slight upwards bias to it, we've been stuck in a range and just chopping back and forth, trying to figure out what to do next. And I think probably continue this for another few weeks before we get, I think, more clarity as to when we're going to raise interest rates again. And then from there, we'll see whether the U.S. dollar runs up into that announcement or if it's a surprise and runs up post-announcement. But I think at the moment, we still have a little bit more consolidation to go before it really figures out what it wants to do next. Now, interestingly enough, as an aggregate, it's gone up, but it's still sort of stuck in neutral in some of these other charts I'm looking at. Here's the US dollar versus the euro. And remember, this is inverse, right? So up is good for the euro and down means the US dollar is rallying. And so here is a picture. The US dollar did rally a bit over the last week, going from this potential breakout of the euro at 117 all the way down to the strong support level of the euro here. I expect the euro to hold as it's done the last couple of days, but the US dollar has picked up some strength, which is starting to put more pressure on the euro here. This was, I thought, a very nice trade setup, but it never really materialized. And at the moment, we are starting to get another trade setup at support here, but it's a little bit trickier because there's a lot of overhead resistance now in the form of these descending trend lines that is going to put it, make it a little bit of a trickier trade. Because now at this point, I don't think this is as clean a trade as what we had before, and it's not a trade I'm looking to take because it could make its way all the way back up to 117. But you've got all this overhead pressure. If you entered now, you have this pressure of this trend line right away and the moving averages. And if you enter then, you're in the middle of the range and your stop is way down here, 115, and your target's at 117. So I think overall this is very messy and not a good trading opportunity at the moment if you are swing trading the euro. Now, in contrast to that, the US versus the Canadian already sort of bounced and is struggling at this level. I also don't think this is a great trading opportunity at the moment, mostly because typically when you break down from a key level like this and you come up and retest it, more often than not, you fail at that level and come and head right back down. So I think there's a lot left for the US to prove versus the Canadian. And judging by the fact that we're at the top of our range on the UUP index, I suspect that we are going to struggle at that level. So not really looking great there. Now, again, in contrast, the US versus the yen actually does look like it's in an okay spot to start looking for an entry. Not there yet, but what I'm seeing here, and bear in mind this white box is a longer term range that it's been in, and I still think it wants to get to the top of that range at 115. And so of the three major currency crosses I like to follow for the US dollar, this is the only one. And again, right now it's not looking good. It looks like it's trying to challenge and break this intermediate trend line, and it's trying to lose the 50-pair moving average. And if it falters there, then it's probably going to head right back down and test down here to 110. But if it can stabilize here and then sort of break this channel, this short-term channel, then it's a nice long play with a move back up to 112 and probably a longer-term play that you can make all the way back up to 115 as long as it doesn't lose this trend line. But if it loses this trend line in the next couple of days, it probably heads all the way down to 110, and that probably shows it's probably going to be concurrent with broader weakness across all of these currency crosses. Okay, so we're looking at all this and why. Well, I know a lot of you guys aren't forex traders, but maybe you're looking at gold or silver, or maybe you're looking at miners. And if that's the case, then you should realize, because of the strength that has kind of come into the US dollar recently, I know it's not a lot, but it's continued to depress the price of gold and silver. And actually, gold and silver has struggled even when the US dollar was sort of weakening. And overall, again, I'm not that excited about gold and silver. And I do think they're getting very oversold and are probably going to get a relief bounce very soon. But I think there are better trading opportunities in other areas, and I'm not that excited about trading stuff like this when they are below very critical levels of support on long-term charts. Again, this is very oversold, and it's probably due for a bounce, but I'm not that excited about it right now because I think there are safer and easier trades in other spaces. And again, here's SLV below critical support at 1450. And really threatening to roll over again. And if the US dollar cranks up for any reason, these things could really take a real big surge to the bottom as they try to get a sort of a capitulation and get rid of everyone they tried to hold and sort of come in at these levels. Now, oil is in a different place. But you can see today, really struggling right now. And I think at the moment, looks like it wants to finally lose this level here at 66.50 or so. And if that's the case, we've got another run down here to 64 and change. Maybe get to the 200-period moving average and get down to this little area that supported us when it last broke that ascending channel that it had formed. Overall, I think oil at this point is in a pretty established range. And interestingly enough, the bottom of that range is way down in the 50s. Now, there's a lot of room here. It hasn't been tested, but I think ultimately the bottom of that range will be around $54, $55. And why would I think that? Well, because that was the top of the last range, right? And it's nice to see that we found the ceiling at 75. I don't think our economy or our market's ready for oil in the 100 to 85 range. So ideally, what we want to see now is for oil to drop these levels. And as you can see, the next level to watch on oil would be down here around 61 to 60. And then it'll probably bounce there. But I think ultimately, what I'm hoping to see is that oil stays in this range from here to the end of the year at the very least. For now, if you were looking at oil names, I would say stay away until we get this new momentum that started to the downside until this sort of dissipates, which may not happen. It could happen right now at this level, and maybe we get a bounce tomorrow, but more likely than not, it needs to head down to about 64. And then oil, I think oil names will follow suit with what we're seeing here, okay? All right, so that's oil, gold, silver. That's the U.S. markets. We have a nice turnout. Wes, you want to look at Genco Solar? We'll look at that in a second. Anyone else? David, good to see you in here as well. Mike, Ron, Scott, if you guys have chart requests, feel free to add them. And yeah, all right. Let's take a look at Genco. And Denise, you want to look at AMGN and CGC. All right, so here's JKS, Genco Solar, and not really nice last couple days, but the longer term trend's not that hot. All right, so we found some major support, and let's take a look real quick at what solars in general are doing. I have not looked at TAN in ages. All right, so also found some support. All right, so Genco Solar is a little bit ahead of the game in that they've already started to make their way back up after bottoming. Awesome, Denise. Thank you very much for joining my Patreon page so quickly from learning about it. I appreciate the support. And I will send you a link after here on the screening webinar that I'm going to have now in a couple of hours. All right, so here is what Genco Solar has done recently. Now, let me know, Wes, you're currently up 12%. You're curious about thoughts on it moving to 17, 18. There's a big volume gap on the previous drop between 15, 17. All right, so let's take a look at that. I agree with you. This is a vacuum, right? Basically, all of this was a vacuum. You've got all this price action here and all this price action there. I think there's a very good chance it makes its way to 17. I think that's a very legitimate target based off of what we're seeing here. Yeah, I think that's a very legitimate target. Now, it might not get there right away because obviously this is a name that has a lot of depressed value and a lot of selling pressure, right? So you don't often get very clean moves on these types of names, but this is the type of trade I was in. I'd be looking. That would be the target. Would be something like that. Now, you've got the 200 period and that, which are ultimately going to be walls, but that should not get in the way of a move up to 15, up to 16, 17, probably not 18. I think 18's asking for a lot. But yeah, 16 is certainly doable. That's right where we have that wick. And then I think 17 is even likely as well. Now, I remember these guys are usually off, like as far as when they report earnings. I'm pretty sure First Solar and some of these others already reported, but let's just double check. Oh no, they report soon, August 13th. So that's one thing to keep in mind. They do move about 10% during earnings. 8, 9%. You can see it's 8.5%, 9.5%, 8.5%, 9.5%, 8.5%, 10, 8. They very consistently move 8 to 10%. Okay. Now, granted, that's really about $1.30, $1.40, but that's pretty big on a $15 stock. So you do have that to keep in mind, right? And what you might want to do in that scenario is maybe at the end of the week, if you still want to hope for a gap up on this off of earnings, then maybe you want to convert your play into maybe like a 16-17 call spread. So book profits and then take I don't know, maybe 20 or 30% of your profits and convert it into a call spread. And I'm assuming you know how to trade options. But if you don't, Wes, just shoot me an email and I'll show you an idea of how to do something like that. And that would be a safe way of staying invested in this if you didn't want to hold through earnings. And I would say that's the biggest issue right now would be earnings is obviously coming very soon. And yes, it could propel this right back up to 18, but it can also bring it right all the way back down to 13. So that would be probably the only issue I have with this right now. But just in a vacuum, looking at the chart, I think it's a very good chance that it would make its way back up to 17 sooner or later, right? I think that would be the next move, and this would be the trend line I'd watch before I got too worried about it. But earnings is going to probably either give us a quick move below that trend line or a quick move up to 17. I think that's what's going to be the catalyst that pushes it to either extreme. Okay. All right, Denise, you want to look at AMGN? All right, and as you can see on the weekly chart, there's really nothing negative about this except for the fact that it's already been in a strong uptrend, so risk reward's not the best, but overall it's in a good place. Now you can pretty much just I guess there's something like this. It's really just it's a zone, right? But we'll leave it at one trend line. But it's basically this range between 170 and about 175. It was a ceiling, and it's flipped over and become a nice support zone. At the moment, that's not really an issue. We're so far away from that level, but it's important to keep that in mind because this is very similar to what we saw on the NASDAQ and IWM and what we're trying to see on SPY. We had a base, and then we built on top of it, and we made a new base. And we're kind of at the top of that base, right? So this is very similar to the markets in that we are pushing highs and testing whether this is going to be a ceiling on price action. So I'm not sure if this is, you have a long-term hold position, you have covered calls. That would be ideal. That's almost perfectly what you want to do right now. Covered calls at 200 would be fantastic. And yeah, that's perfect. You have a 200 and 210. That's I couldn't. That's perfect, Denise. I couldn't recommend anything better than that. I think that's ideally the best way of doing this. Like the markets, there's always the possibility that it pushes to new highs. But I think overall, this is an area where it's more likely than not that we stall out. And then if it does, it should meander its way back into that range and spend some time trying to figure out what it wants to do next. And I think that's pretty much what I'm seeing overall, not just on this, but in the markets. And this is sort of mimicking what we're seeing in the markets. Now, in the intermediate term, it's in this sort of channel, but I don't think that's a concern for the sort of trade that you're in. I think the easiest way to these long-term holds that you sell calls, the easiest way to evaluate them is by drawing those boxes. It's interesting how it seems simple, right? But sometimes that's the easiest way to really, when you want to look at them, you don't want to overcomplicate things. And I think a lot of times the easiest thing to do when you're trying to figure out these sorts of trades is just go to a weekly chart and just draw these boxes. And this is what it does is it tells you what traders think, right? Last year and the beginning of this year, traders thought that 140 was a good buy, but they thought that 170 was overpriced. And then eventually there were more buyers, and then it flipped, and all of a sudden people thought, you know what, maybe 170 was a good price, and 200 is a bad price. And that's what it's doing right now. And I think that's the easiest way to envision the covered call strategy is by looking at it. And if you get these clean boxes, it makes for very easy ways of taking those types of trades. All right, now Canopy Growth. I don't know who these guys are. Pharmacy, healthcare. Is this one of these? Is this one of these marijuana companies? Yeah, marijuana market. Okay. This is pretty strong.
Yeah, it's a Canadian stock, Rob.
Oh, okay. Thank you, Frank.
On that one. There was a competitor that actually got bought out, and these guys have done some really nice partnership deals. I think on this one, you know that Constellation Brands, the one that owns Corona?
Uh-huh.
They actually did a big buy into this company. So they're actually a profitable company. I checked their statements already. They're profitable, and I think it's in October now that it's going to be going legal for marijuana in Canada. So that's why they're probably playing. Who asked about this one?
Denise. This says, hi, Frank.
Oh, hi. How are you? Hold on. Oh, there it is. Yeah, it's Denise that asked. Okay.
Yeah.
Denise, there was actually another one called Leaf. They actually got bought out already. And they actually had done a partnership with one of the, who was it, with Shoppers. And then they got bought out. So a big pharmacy in Canada. So what ends up happening is whenever in areas where marijuana stocks get, like where it gets legalized, say in a state in the US or in Canada, the liquor sales end up dropping back. So it actually made sense for Constellation, which owns liquor, beer, wine products. They have a whole bunch, if you check their website, really strong company that's done really well. It actually made sense for them to buy into them. They may actually buy them out at some point, Denise. So if you notice, this thing under $10 was really good buy multiple times. When it dropped back, it went over, then it dropped back. So I know a few people that actually picked it up under $10. That was a pretty key level. So at this point here, a lot of this stuff is priced in. I checked into this already, Denise. The other company not trading anymore because it got bought out. Okay, they were also profitable and had some good sales. There was some questions about their accounting for some of these companies, how they actually hold their product in stock and stuff like that. But from what I've read, they keep running out of products, so that's usually a good thing as it starts to grow. So they do sell to, right now they're selling to the market for medical marijuana, but once it gets legalized, I think it's in October now, they had pushed it back from July to October, then it should pick up again. And the good thing with these companies is they're also trying to get worldwide, not just in Canada. So it was strong today. Yeah, it moved up, I see a little bit today. So yeah, longer term it's good, but I'd say wait for it drops if you're going to pick it up. But I love that deal that they did with Constellation. That was actually a really smart decision. And there's other companies that are getting in. Now the banks are warming up to these type of deals. They weren't before. Canadian banks are very, very conservative. And they've actually warmed up to these type of stocks. Okay. Oh, so you have a longer term hold on it. Okay. Where did you pick it up? Did you pick it up below that $10 like some people did or no? And you sold some 35 covered calls. That's beautiful. That's actually really good levels. No, not that good? Okay. Yeah, because it's been in the news for quite a while, well before all this stuff happened. So you can see it was dropping back quite a bit, but they actually positioned really well. I've been following the company for quite a while now. They actually did some key buyouts of other competitors. So they bought 2 or 3 competitors. They actually have a deal with Snoop Dogg for a strain that they sell for him. So they actually positioned well in terms of their branding. So they have a few different brands under their name. And the partnership deals that they've done have been like really superb for that sector, which not too many companies have done. And I think that's why they've done well. It's funny, Denise, I don't know how close you follow this company, but their head office, like where they grow everything and where they have everything, is actually, it's near Ottawa, but it's it's an old chocolate factory, Hershey. So it's actually on Hershey Drive or something like that, which is actually kind of funny because it's a marijuana stock.
Makes sense.
So it's actually, I don't know if they did that on purpose or they thought, okay, that's good. That's good to get us some free publicity. But I actually thought it was kind of funny that it's an old Hershey or Cadbury factory. But yeah, the sector is going to continue to grow. It's just a matter of how big it's going to get. It should have a big push right when it gets started up, but there might be growing pains as they continue to grow. But they got tons of interested parties waiting in the wing. If things go well, this type of company won't have problems getting financing. So that's one thing to keep in mind. If they grow, they're going to grow really big, and having that backup with Constellation Brands, which is a huge player, they're sort of like hedging themselves with legalized marijuana. I don't know if they bought into some of the ones in the U.S. as well, but they probably might have. I haven't followed that as close, but I have followed the Constellation stock, which is I think it's STZ, Rob, if you want to check it out.
Yep, pretty sure that's them.
Yeah, Constellation brand. So if you actually look at this company, this continues to do well over time. So liquor and Corona beer, it's like a staple regardless what the economy does. It's usually a good buy on any type of dips. So they're using that leverage, their shares, right, to buy into these type of companies because they've got the available capital. And you can see how well they've been doing. They just got to issue some shares and they can buy whatever they want. So it's actually a very unique business model for what they're doing and getting into that type of business, which actually affects them in a negative way, but by getting into that business actually helps them going forward. So it wouldn't surprise me if Constellation buys them out at some point, or they do more creative partnership deals with other companies, or do some more mergers and acquisitions. I think that's a smart way to go, and not just in Canada, but outside of Canada. And I think that's where some of these companies are going to be leading the way. Okay. It's nice when they're profitable because then they can get more money from other companies, but they also attract these type of deals, which, you know, Constellation is not going to do a deal with a very, very small company, you know, like those very high flyer type companies. So if you remember, there was the time when we first looked at these marijuana stocks, they all collapsed. So they all dropped right back because a lot of them were making money. These guys are actually growing sales and growing profits. They're doing it through acquisition, but they're also positioning well to be one of the leaders, if not the biggest leader in this market. Okay, at least for up here. Okay. And you might also have some of the bigger pharmaceutical companies also going to be looking at these as well as another vehicle, because if they do sell them, they may even sell them in what's it called? And that's why they did the deal with the pharmacy, in the pharmacies up here. Okay, so they're not sure if they're going to do like individual offices, like individual retailers in the storefront, but also that other avenue. Okay, so just some interested info for you there because I had looked into it.
Thank you, Frank. Look at Frank, all super informed on the marijuana stuff.
You woke me up. You woke me up when you
said, "Ooh, hey, what? Can it be? I'll take it." So
Yeah, when you said when I heard the name, I was just
No, I
thinking
know
back.
you definitely knew a lot more about it than I did.
Yeah, I was in ES trade at the time, and then I just heard you saying that. I took a little
So
profit on ES.
I do have a little bit
Okay.
of advice, Denise, on this sort of a stock and these sorts of names. You probably don't want to cover your entire holding with covered calls. Reason for that, like Frank said, a lot of times these guys are buyout candidates, and also they're just explosive movers. And so the last thing you want to do is cap your total gains on something like this that's more speculative. Now, okay, you haven't. Good job. There is, of course, the other side of that coin, which is, of course, these things could drop a lot. So you do want to lower your cost basis as much. So I don't think covered calls is a bad idea in general, but you definitely want to be able to leave yourself in a position where you could take advantage of these sometimes overnight explosions that you can't really react to in the options market. But in general, this thing has done very well. You saw on the weekly chart the explosion of volume as it started to get above $10. And I think overall this thing probably has a long way higher that it can go. But it might need to really sort of work through some more issues before it gets above that. I notice a lot of times these sorts of speculative names, they do these big moves and then they drift down, and they drift down for weeks at a time or even months at a time, and then eventually have these big surges up again, and then they do the same sort of drift. And I know we're printing a nice tight ascending triangle right now, but oftentimes they do actually fail these triangles and drift down and then eventually get the big spikes up. That might not happen this time, but that is something to keep in mind. But these types of names, a lot of times, when you're holding it longer term, the technicals help with the trades, but your fundamental ideas and information have a lot to do with weathering the storm when they do have these sort of trickle downs. But yeah, the one advice I'd give for this, you're trading it very well so far, is just, what you already aren't doing, which is don't take too much, don't cover the entire holding, because if there's a buyout, then you're going to be kind of upset if it gets bought out at a significantly higher price than what you sold your calls at. Okay? But other than that,
And one more thing, Denise, to keep in mind, give two options going into October. One, that it continues up once all that stuff's approved, or if it gets delayed. But also it could sell off on that news. So a lot of people might, they see it almost like backwards. Sometimes they buy right into that, and that's actually where they catch the top, and then it drops back, sort of like what you saw into early 2018 when it faded right back along with the market. And then you can get a much better buying opportunity. At least you can see into that 19, 20, 21 was actually a really good spot as well. So watching those keyhole numbers, okay, so if it breaks over 30, then use that maybe as protecting yourself if it drops under 30. Rob can give you some guidance on setting up an option play for that. But keep both in place, that it ramps up into that. But also it could sell off once the news comes out, or say there's any delays or issues or problems. But longer term, I think these companies do very well. Okay, at least these ones that are profitable. And check their statements. You'll see that they've been profitable quarter after quarter. Overall, anyway.
All right. Thank you, Frank. Thank you, Denise. Thank you, Wes. Thank you, everyone that attended and everyone that participated. I appreciate the extra. There's always we end up getting really nice sort of conversations and discourse going on when you guys have these chart requests. It's always interesting where we branch off with and what we get to explore just with simple chart requests. So I always appreciate the participation from you guys. That is going to be it for today. We'll meet again next Wednesday. And those of you that are members of my Patreon site, I will see you guys in about an hour and a half, and we'll go over looking for charts and how we find some good trades. Okay. Have a good rest of this day, and I'll see the rest of you guys back on Wednesday.